Morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Appreciate you stopping by today. I stream live Monday through Friday, 11:30 to 1 p. Eastern Standard Time, and this stream and the Trader Lab are available to everyone at no cost in the Bookmap server. The Trader Lab is a community of like-minded traders who come together to leverage their collective experience. This is about the business of trading. In addition, what I share here is based on structured trades that are available to everyone in the Bookmap Discord Trader Lab community. The idea of Trader Lab is to help developing traders understand the actual business they're in, and also to build out trading plans that have statistical edge. The business of trading is not about being right or predicting or having the secret whatever or the only one thing you need. I've been seeing advertisements for the only thing you need since I started in 1980. So nothing changed as far as marketing goes, and the reality of trading hasn't changed either. So while the technology has changed, and now we have all kinds of indicators and all the stuff that's in your your software toolbox, nothing has really changed. When I started in 1980, Wells Wilder came out with his book, and I can't remember the name of it, but that all became available in 1978. So 78-ish, everything was new. RSI, all this kind of stuff. Stochastics, I shared an office with George Lane, who created it. I thought that was the holy grail. And I spent years going down the path of discovery of indicators because they seemed like they made so much sense. And with the randomness of the market and the randomness of these indicators, everything had winning trades. That kept me going, you might say, in the wrong direction. So I was looking for certainty because I thought indicators were created. In reality, they just created noise. Noise is not something you can create edge with. So over time, at least in my experience, and unfortunately it took too much time because I kept exploring these indicators, researching, modifying, tweaking. I'm sure some of you or most of you have gone down that path, and I found that they didn't do anything except random winners. So I had to change my beliefs. I had to modify the things that I did, and it was very hard to change what I was looking for. Psychologically, I was looking for certainty, and in reality, it doesn't exist. So I had to change what I did to operate in an environment of 100% uncertainty 100% of the time. So this was, shall we say, the journey. And hopefully you don't waste as much time as I did. For me, it was years because technical analysis was new, but you guys have a different problem. Influencers, the internet, YouTube. And when I go across YouTube, it's very interesting. I continually see the same stuff. The only one thing you need. How I made $1 bazillion with this one thing. Trade this setup, blah, blah. Do you still see that? And are you still responding to it? What are you actually responding to? You're responding to your fear of loss and your quest for certainty in an environment where it doesn't exist. Now, I must caution all of you. I am streaming from Costa Rica. I have been having substantial issues with hardware malfunctions, random crashing, internet issues. I'm on the edge of the jungle, and typically I can manage pretty well from here, but I have hardware issues, and this is not a place to get hardware dealt with. So I'm going to ask your indulgence that if I drop out, that you're patient, and eventually in a couple of minutes I'll come back, especially if you're in YouTube and also Discord. So thanks again for visiting Trader Lab. Hopefully things will be stable, and the way things have been going here, it's almost as random as trading. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. By the way, can I please get a screen and audio check in YouTube and Discord? Thanks, Marty. I thought maybe you were asleep at the switch over there. Okay. I'm going to try to keep this focused, but also I have to operate with minimum resources here. Also, my data is slow, so you're going to see lag in Bookmap. That has nothing to do with Bookmap. It is a data provider out here, and I'm really running on a tin can in the string down here in Costa Rica. So, a reminder, if you haven't taken advantage of this, there's an offer. It's the Black Friday sale. This is the best it's going to get. It's over on December 31st. The clock is ticking. If you haven't taken advantage of this, or you ever wanted to try a Bookmap, I'm going to say, check it out. If you just want to get your toe in the water and try it on a monthly basis, you can get a discount there, or add-ons. And the add-ons can be pretty cool. Go to bookmap.com if you want to check it out. I always wish they would have done this for me when I purchased Bookmap Lifetime in, I think, 2015. And amazing, isn't it? I don't know if you guys know this, but Bookmap originally was not designed for the retail community. It was more the quant and the algo-driven community. So Bookmap has a history really coming from the other side. And when retail traders, some retail traders saw what Bookmap was doing, they kind of latched onto it. And then because of the demand that developed, Bookmap, the product evolved, and it was developed more towards a retail community. So I don't even know if you know that. I've also worked with hedge fund managers, substantial managers, and we've worked together on elements of harnessing internal aspects of Bookmap. Fun facts to know and tell, not important, but hey, just so you know, there's much more under the hood. Now, in the Trader Lab, what I've attempted to do is distill, and I've been going on 47 years of doing this, this coming year, and professionally and otherwise. And over the years, I've coached and individually trained traders, was on a trade desk, was a fund manager, a lot of different things, And when you're in the business that long, you get to do a lot of things. Initially, I was going to go down on the floor because I was over at I had office at CME, I had office at CBOT, and across the street, so we're right in that area in Chicago. So I was very much in the community, and was very fortunate to get to know a lot of people. Some of you've read about, in Market Wizards and this kind of stuff. But knowing people and being able to trade is a different element. When I started out, I was a trend follower, so there was no day trading. We didn't have PCs. We didn't have an internet. So it was, I'd say, a rather different world. It was an analog world. But my dream was always to be able to trade remotely. And even in the mid-1980s, when we had a dial-up modem, you guys might not even know what that is, I had a CQG machine. We're talking something that was rather substantial with the CRT monitors, and I was using that remotely. So might have stuck with that because this laptop is having some issues. Anyway, RTH open, just fun facts to know and tell. Don't know why I'm saying that to you guys. It's not really important. I think I'm delirious. It's going to be like 85 degrees here today, 87. Right now it's 85 in Costa Rica. And the monkeys were quite active this morning outside my villa that I'm staying in. And these are not little things running around. These guys can pull your arm out of the socket if they're inclined. Had an iguana walking around here. It was probably about 15, now maybe 12 feet long. By the way, did you know that iguanas can recognize human faces? And if they get to know you, they're like the most intelligent lizard. I know you tuned in for this, but I figured just give you a little something different today. Now let's go take a look. RTH open. Now, we had a big sell-off on Friday. Those of you who followed the stream, and unfortunately, I'm not going to push my luck. I'm not going to be showing you the higher time frame, but there are charts posted in Trader Lab if you want to kind of get a little sense of this. We had a big sell-off on Friday, and we knew that the potential existed for a large sell-off because when the market goes up, and it was going up without the longs who were sitting in the market being, I always say abused, but what it is, the market goes up, and if you run out of buyers, their sell stops trailing the market, and then, those sellers, Those stops can become sellers, so you get new shorts and you get long liquidation. That's what creates our outsized moves, other than external news events and disruptions, okay? So everybody that was long, when I use the term everybody, I mean anybody who was trailing their stops from the gap down below us was on the hook. So they got thrown under the bus on Friday. It's a wonderful thing. But what does that say about the current market condition? Now the market is short from Friday. Think of the market in a way like it's a rotational process. And what makes the market go up and down? It's the buyers or sellers on the opposite side of the direction of the market. This is, and I'm talking about rotational behavior. If we understand that the market rotates and that the buyer, when the market goes down, the buyers are built in shorts that have buy stops, right? And the opposite when the market goes up. So what does the market do today? It's going up and down. Well, okay. So how do we deal with that? Well, if the market opens higher, then there's a couple possibilities. The market can keep going higher and we squeeze the shorts, or on the gap higher, we take out weak shorts and then the sellers come in again. Now, nobody knows. So this is part of the joy. Remember I said at the top of the stream, it's random. So if it's 100% random, 100% of the time, it's not mechanical. It is a business of alignment and randomness. It is not mechanical. I know we want mechanical, and sometimes it is, and sometimes it isn't. So let's go take a look. RTH open. Now, let's see if I can get this all going correctly here. Now, again, remember, if I drop out, not because I don't love you, it's because I'm in Costa Rica, but I'm having a hardware issue by all appearances. So that's something I can't do much with, except I'm trying. So ETH volume point of control. This is the highest volume from the last auction, which is the ETH. So think about this like a retail price. Up above us from the sell-off, we have yesterday's or Friday's high. Buy stops are there. A single, and this is just a market profile term, it's resistance or an outside edge, ETH high, and we're opening here. Looks like we're going to the moon, Alice. We're above, and now, by the way, this is the March contract that I'm quoting. And basically, there's just a price difference of around 59, almost 60 points. So when you do rollover, there's going to be a spread. So that's what the difference is. Otherwise, it's pretty much the same. Now, the other thing about rollover, just so you understand, most professional traders do not trade rollover. And it depends. You can keep trading the December contract until you see the volume move over to the March contract. That's up to you. A lot of traders don't even trade on rollover. We used to not even trade. But if the CME has on its website has a rollover, I'm going to call it calendar, in the sense of how the volume moves. So it's not that you can't trade it, but you have to be conscious that if today the volume is shifting, you always have to make sure there's enough depth. So if you look at your DOM and if you look at the ESH, you're going to see that it's not really thick out here, and typically it would be thicker. So it's a bit thin. So up to you. Just be aware of that, or stay on the December contract and switch over maybe by Wednesday or Thursday. So RTH open. We're opening out of value in yesterday's range. Now the possibilities are the following: open higher, squeeze out these shorts right away, abuse them, or open higher and then attract our sellers. Now, when I say or, it's because that's all you got. Maybe. Write that down. This is not a business of prediction or being right. It's a puzzle. And the idea is when you have a random environment, you're not in the prediction business and you're certainly not in the mechanical business. So I always suggest to developing traders, and think about this, use conditional statements. I built trading systems when I was managing dollars. I was trend follower, so you know. So when you're across a lot of asset classes, there's no way. You got to have it automated. So I spent a few years doing that. But when I built the systems, they were predicated on conditions. So if this, then that. If not, then what? And then if a condition changed, it's almost like a schematic or a train goes down a different track. Does that make sense? So if the train's going to go down a different track, in other words, it does something different, then you align one way. And if it changes, what's qualified in one condition then changes. And if it changes, now the thing about us is we may think it's doing one thing, zigging, and it turns out it's going to zag. Now, if that happens, we won't know until hindsight that there's change. So we have to accept that we take risk and there's no predictability. I hope that's making some sense. 1 second, please. Got to make sure I'm okay in YouTube. How are we doing in YouTube? You guys okay? A little forgiveness, please. I am in the jungle and I'm having hardware issues here with this laptop. So it's the kind of thing you want when you've got to drive almost hour and a half and change to get to a computer store where they don't speak your language, and it doesn't mean they can do anything for this because I believe I need a new motherboard or maybe a new computer. So we'll see. So RTH open, ETH high, overnight volume point of control, opening at a value. This is a kind of a what's going on moment. Overnight mid. So this is the retail price. We're above key levels here. So that sets up the possibility of north. Now let's look at this a little differently. So coming in today, and I don't, with this laptop like it is, trading is kind of off the table and rollover for me. So I'm not trading here until I can maybe get this stabilized. And I've done a lot to try to do that, but not so much. So RTH open, ETH high. High probability of taking out either ETH high or low, high probability of taking first hour high or low out, and retail prices below us, high probability of getting there, and then whatever happens, happens. So let's see, RTH open, and I have no clue. So I have, by the way, no clue means open-minded, no prediction, alignment, not prediction. So I'm opening higher inside of yesterday's range. There's a 97% probability I take out either ETH high or low. There's the high. That's nice. Previous high or low, 82%. Previous high is right up here somewhere. There. Overnight volume point of control, 81% probability to go there. Value area high, 72% probability to go there. There's more. Naked volume point of control, that's the highest volume, think shopping, highest volume from Friday, 68% probability. And then taking out the first hour's high or low, somewhat leans to the high side. Just saying. And that's enough to get us started, okay? So, but what do we know? This is where statistics and everything else. We know that the market is short from Friday. We know if we open higher, we can squeeze those shorts and we can really squeeze the heck out of them and get new buyers in. And if that happens, we might want to think about buying a dip and getting long. The other part of that is suppose we do open higher and then we get our sellers. Then we can continue down. Nobody knows, not our job. Now let's look. I want to remind you that if this, then that. If not, then what? If we open here, if this, then up. If not, then what? Let's say. Now, I'm going to use the term here. When I say the term hoping, I was hoping that we opened lower and got additional selling early today. That was my plan coming in as a possibility, not as prediction. And if we did open lower and got more shorts, now we'd have fuel. We'd have the shorts that come in to get squeezed, and then we have the shorts in here from Friday. That to me would have been the ideal scenario for a short squeeze. Well, trading. So RTH open, looking for it to go higher. I have liquidity here, I have resting liquidity here, and I have a retail price there. So 82% probability, and also can, go wherever. Let's look. Now, this is an advanced concept. I always talk about this, and I'm going to try, because of my limitations here, because of the challenges with the hardware and just being in the jungle, basically. Pretty neat, by the way. I was telling you about the iguanas. Iguanas are the most intelligent reptile. I had no idea. If they trust you, they'll close one eye and keep the other eye open just in case you get out of line. Really, I was amazed. This is called developing volume point of control. So this is our retail price. So when we open here, I am thinking, I'm looking for which side takes control. And I understand when I trade the open, it's the most aggressive place I can trade, bar none, because I have no structure. I hope that makes sense. But this is where you can learn speed reading. The auction, and I use a market profile and the volume profile. I don't use indicators as you guys think of them. I found the indicators are the problem, not the solution, but that's just me. Might not be like that for you. And it's not that you can't use them, but if you create conflict and you can't make decisions quickly, then you're actually at a substantial disadvantage. You have to research and vet everything. Everything has random winners. If you have a random buy-sell generator, you're going to have random winners. What does that tell you about your indicators? And why are there 150 of them or so in a software toolbox? You will find most of them are not usable, though they have random winners. Right here, this is yellow lines, the retail price. It starts at RTH open, 8:30 my time, Central Time here in Costa Rica. That's the fair price. My sellers show up here. So I've got my sellers. Now, where's my resistance? Now, I'm going to take you into microstructure today. I'm also going to show you triggers. Now, when I show you triggers today, I'm going to show you maybe ways to use triggers and what it takes maybe to use a trigger more effectively than you might use them now. A lot of us, when we see a trigger, FOMO is also triggered. And we tend to behave like, oh, it's getting away from me. So you might sell here, right? But now we have the opening swing high over here. So what's going to be there? Maybe buy stops. So let's go take a look. VPOC migration. That says maybe this is too high. I'm going to label it. I made these up. I call it a variable high volume node. Now, I'm going to show you again triggers today. I want to try to concentrate on something because I am sort of at a disadvantage here with the software and some other things. Not Bookmap, but IRT and some of the other products I use. They're all covered up. New retail price. So let's talk the language of the market. I'm thinking the market might go up. I'm just telling you, that's me. But I'm seeing my sellers right away. Well, where are my buyers? So too high, new retail price, too high. So I have sellers here. I pull back here, maybe too high. I break low. Now, here's what can happen here. I can do this. Take out the opening swing high. I'm going to put this, I got to mark this, by the way. Guys, are my levels accurate here? This is not the IB high, right? The IB high happened after the open. Is that correct? I need to know that because something looks a little bit off. Yes? What is yes? Right. When did it happen? Did it happen after the RTH open? Okay, so this is not it over here on the left. Is that correct? So we took out the opening swing high, correct? Did we take out this high in the RTH? Okay, but you're saying this swing was taken out after RTH opened. It didn't happen here. I just want to make sure my level's correct. Sorry, guys. I'm looking for clarification on something. I'm still not clear, guys. Can you confirm this for me? Is this this happened? RTH open is here. Did we go up first after this open and then go down? Is this the actual IB high? And it actually might have happened on the open. There's like a 1 second difference. You guys are confused. I'm confused. Oh, right at the open. Okay. Okay. So this is the IB high. All right. So this was the open. So this is, oh, here we go. I got it. So this is okay. Thanks, guys. RTH open. So that's the opening swing high. I got it. All right. Threw me off. Thanks, guys, for clarifying that. Let me try to. Yeah, it didn't make sense. Look at that. Okay. Sorry, guys. You know, with the way the data is here in the internet lag, things are a little out of whack. Okay. So this is actually where we opened right here, there, up, down. IB high. Okay, guys. Thank you. Well, so I can't, I'm just going to leave it. So open here, break low. So this says potentially too high. This is actually the open here. So this is off a little bit. And so, you know, it looks like it's so far off, but this is 829 and like 58. It's like a second or something. So that's probably my lag. So here comes down, here, mid and VWAP too high. So now I'm looking for a short. Clueless, watch. Now, let me show you resistance. This is resistance. My sellers are here. This is resistance. This is resistance. I call these variable high volume nodes. This is a short. This is a structured trade. This is extremely aggressive. I don't suggest this for anyone. I suggest you learn to read the language of the market. This is over an 80% probability. Past performance, not indicative of future results. You got to vet this. This would be your scale. There. So if you got short here or here. Now let me talk about triggers for a moment. Because this is something I showed you guys, but I want to show you a little bit more about them. This here is a short. The thing is, where do you enter? This is where you enter. Now, I'm not saying you can't enter here, but you're going to be short in the hole. The trades, I think, that'll offer you less risk, and remember, the outcome is random. So whether you're selling it here or selling it here, the potential for the trade to fail is equal. But if you sell it over in here, you've got a lot less risk because your stop should go here, at least, or above the opening swing. Just saying. Now, that's up to you to vet. Let's watch a little further. So what do we know? That's too high. And this is our target, don't forget. See the behavior? Now, where's our resistance? Isn't it there? Now, I can't draw my lines here either. I've minimized everything. Gavin Hoffman, you're asking me about long entries. Well, I haven't seen it, so I don't know if there are long entries. I'll stay on the shorts until it changes because I want to show you how the market develops. So this is a sell. There's a retracement. So depending on your plan, let's assume this, This is a short because of location. There's another entry. If you're someone who wants to be patient, where is it too high? It's there and there. These are all shorts. So this is short covering. And now let's see the short. Here's another short. Two entries here, guys, here and here. These are retracements to triggers. So instead of doing this or selling this or this, you would be waiting for it. Now here, let's look at this. We come up and I'm testing, remember, location, location. This is like real estate. My outside edge is here. My high volume is there. High volume is like a retail price. So you think of these like they're an auction. And this is really what the market is. What's too high, what's too low. And it does it in all time frames. While time is not the element here, at least for me, with the volume profile, it's not time fixed. It's behavioral. So when I'm using an order flow tool, I know that this is too high because the retail price is too high. I leave it. We're not paying that. We leave. Well, now when I come back on a retracement, I've got liquidity and I've got location. So I got location, location, liquidity, outside edge. So if I'm going to sell this, and I'm not going to sell here because I'm not quick enough, I'm only looking at a location and I know this is where it was too high. So if it was too high here, I can look to sell this area and I know we broke away from this, so it's too high. This was too high. Now this might be too high. Remember, might. So I can put my stop here and now I got to get into this thing. So now I come back to the location, teeth chatter, no clue. Break low. That's my first suggestion that this still is too high. Now here, right here, is where the sellers took control. There's absorption here. Now this is the March contract, so it's not going to look the same as it does in the December contract. So it's going to be a little bit, it's going to look a little different. And we get more volume in here, it'll be easier to read. So I break down, I hit my location, and now I'm looking for a way in. So this is too high. Break low, sellers are below, and here the sellers are below the buyers. So all this is a potential short. This is a potential short. Let's keep going. Now, statistically, I'll bring you back to the statistics. Value area high and microcomposite VPOC. Value area high, if I go back to my statistics, has a 72% probability. Previous point of control 68. So this is a target. This can be a target. There's a sweep suggesting maybe a counter rotation. Notice the liquidity following it down. This is like, I call this the invisible hand. And what it is pressure. There's your sweep, which suggests a counter rotation. This is important up here. Let's not forget that. This. Come up, you get your mid VWAP. This is your call if this is an edge for you. I don't necessarily trade these, and without structure, I tend not to. Let me show you some profile structure, though. All right, show you this. Here's what we know. We know we had our buyers here. It's an outside edge right here. We know this is the overnight volume point of control, which is the retail price from the ETH. Notice where it stops. Why? Fair price. Come back up. This price is too high. I'm not paying that. Well, this was too low. Resistance, support, break down, break low. Now resistance is here and it's out here because this was support. Oh, it's on sale. I'm not paying that. Retail, break away. So now if I come back here, this is what's material. And then, so this is where we broke away. So for me, if I'm going to get short, I really have to be conscious of this and that. And if it gets there, whatever, that's my risk. So let's look again where it is. It's here and it's going to be there. So 2 places. This is called mean reversion, underline mean, because where's the outside edge? So what I know is, let's come back what I know. This is resistance, and right here is resistance, because I stopped, I paused, and this little high volume node was an auction. I'm not paying that. Yeah, but it's on sale, and the sellers took control. The last auction was there, too high. So that is resistance also. So for me, nothing here. Me, not you, me. But if I want to get into this, now I know where my sellers are. And I know this is too high. Now, guys, the idea of this is only to trade when everything lines up. The fact we have rotations is not material, okay? Where's my resistance? It's here. Now, I also have mid, VWAP, and I have resistance here. So I have here and here. Why here? There are buyers here, absorption, there's the icebergs, and my sellers are up here, mid and VWAP. Who knew? Break low. Now I know I can come back there. And you can see we pull outside to an outside edge. If I pull outside, and it's in my plan, and I'm leaning against this, I can look for a trigger, and I can get short for a continuation trade, if that's my plan. Not saying it's a good plan, I'm just saying it's a plan. Now, so far, only shorts. We have about a 75% probability of getting here, another potential target. There's a statistical sheet, stat sheet that's available to all of you in TraderLab, but you have to vet it. Overnight mid 75%, so another target. So, and if you think about this, when you're trading in TraderLab, you're going to have tools that most other retail traders don't have, and of course you have to vet. Gavin, go to TraderLab. There's a link in the bottom of YouTube, and it's a community. There's 60 PDFs I've shared of structured trades. Nothing's mechanical, though. If it was, we'd all love it, wouldn't we? Now we're inside of value. So here's a couple of pieces. 75% probability inside a value area, outside edges here, called low volume node. We broke away resistance, 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 and next statistical probability. Where is it? Here, 68% probability. Not a recommendation. I'm just following a trade plan. I have no idea. Watch. VPOC migration. What does this say, Tom? Well, this is a retail price. And high volume, trading is shopping, right? I always like to say that because we think trading is complicated. I'm going to say trading is not really complicated. What is difficult for us is randomness. It's a different issue, isn't it? So here, it's too high. Well, now it shifts down. What it is saying, let's come back to the language, that this is too high, shopping. And then if I leave this, and there's more volume here than there is there, or what was above us, then the volume and the price is moving together. That's saying is everything above us at the moment is too high. Okay? And we're inside a value area. So this puts 68% probability, and there's more. And again, apologies for the abridged version of this. So I want to focus again on triggers. This right here is an order flow trigger. It's advanced again. So what happens here is these are the buyers, icebergs. I get a sell delta, sell stops. Thanks for playing. They get a coupon to the buffet, and absorption. So I got my buyers. Now right here, here's the possibilities. I can go up here or wherever, and this becomes support. I get a sweep here. The sweep suggests a counter rotation. So everything right here is saying we're going to go up. If you're sitting short, this is your target for 68% probability. Okay? Break low. Here's VPOC migration. Break low. So now I'm under this. This is a new retail price. That's too high. 68% probability and hanging out. Trade management. Watch. Now, this is the retail price. Let's see what it does. So all of this is taking place in the first half hour. What do you notice that's familiar? Let's come back. Here, too high, too high, whoa, where are we here? Oh, okay. Yesterday's low is a target. Yesterday's low, high or low, let me find this for you, 82% probability. Well, we didn't get yesterday's high, so this is the next thing. Now at 9:30, and we have value area low. So all these are potential targets down here. And no idea. And we have a gap down here too. So all of that's part of the thrill. Okay? So let's see what happens here. VPOC migration. So we have this low, we have VPOC migration. Now, here's an important change, and I posted this in TraderLab. And I was looking at this, and I'm at first, you see it miss, and it's like, okay, we're going to retrace, and then we're, going to go down. But where is change? Here's where change came, right here. Notice how we're going down, and we do these rotations, and if it's too expensive, think shopping, we leave, So here we come down, and the idea is keep going. Well, when we come across, there's two pieces to this. And we had a little bit of a conversation between crashes here in TraderLab about what's going on. So yesterday's low, and I think we 1 or 2 ticked it, not sure. All right. So as far as we know, going to 0. Okay. And there's over 90% probability we take out the first hour's high or low, and we took out the first hour's low, and the market is currently short. So this is an outside edge, and this is an outside edge right here of this rotation. So if I come outside and squeeze, but I don't go anywhere, I can do what's called mean reversion. That's outside and trading with the trend. Where is this outside? It's out in here. So it could be here, here, all of this is outside to come back. So if we get through this, then it changes things. Notice what we did. So this is my outside edge, this low volume area. Well, I pop inside it. Now, I'm inside. This says to me, maybe at this time, this is too low. That's all I know. I don't know anything, but it puts me on alert. And if I'm trading, I'm going, something's wrong. Exactly. Because it's, remember the conditions. If this, then that. If not, then what? If this is too high, if this, then that. But it would be over here. If not, then what? Then maybe this is maybe this is too low. Because that's the high volume, and I left it. VPOC migration. Now, notice previously, VPOC migrations were shorts, but now this is the retail price. But what might that mean? Well, maybe this is the outside edge now, and this is too low. Let's see what it does. Here's the possibilities. VPOC migration down here, out the bottom or down here, or rotation and then turn up and squeeze and come out here. Let's see what it does. What did we do? Notice where we came. Out here. Here's what I know. And again, I don't know what the market will do. That's not what the business is. I know what it might do. So I know the market is short. Let's remember that. And if the market is short, that means everybody's short and the buy stops are above us. Market goes up to go down. What else do I know? I tested yesterday's low. If the market is short, which means everybody and their aunt and cousin is short with buy stops above us, and I run out of sellers, what is left? Buyers. Okay? So right here is the last stand at the moment for the shorts, unless it changes. Now I get VPOC migration. Remember what I already know. This is an auction. Too high, too low, retail. If it's too low, I leave it. But what happened down here, Tom? Too high, too low, too high, too low, retail, right? In a microstructure, right? Here, see the buyers? There's a bit of a change, wouldn't you say? Look at that. See the rotation? Different. So right here, when I see the rotation, the antenna goes up pretty quickly. And then it's VPOC migration, which you guys know is a short for me. However, what did I do? I tested yesterday's low. Isn't that significant? So let's keep going. You guys have questions, please post them. If you're in YouTube, thanks for your patience. Remember, if I drop out, hopefully this will recycle and I'll get back in here for you. Everything is very random here at the moment, hardware problems. So, also, there's a link in the bottom of YouTube. I just want to remind you, you can go to the Trader Lab. It's a group of like-minded traders who've come together to leverage their collective experience. It's a professional community, so it's not romper room. It's about the business of trading, understanding the business. It's not what most of us think it is or what we try to make it. This business does not fit what you are familiar with. And that's, most of us are trying to get it to fit. And if we've been successful in the outside world, we kind of think this is just another thing to learn and that we'll do it and that we'll have an ATM in the basement. It doesn't work that way. And if you've been doing this for any length of time, you might have figured that out. Or you just think you have to do the same process better. How about it's not the same process you're doing? Maybe that's the problem, not the solution. It took me many years to figure that out because of all the random winners. But you can access Trader Lab. It's a serious group of traders. You're all welcome. There's no cost. Also, don't forget, you can go to bookmap.com. There is a Black Friday sale going on currently. Substantial savings, best sale of the year, bar none. If you ever thought about trying Bookmap, this is the time to do it. They have different subscriptions, quarterly, monthly, all steeply discounted, add-ons, anything you're interested in. But go to bookmap.com, check it out. So this is the new retail price. If it's too high, we can come down. But what do I know? Maybe I found too low and I got this. This tells me this is a high-risk trade. Now, it doesn't mean I can't trade it. What it means to me is maybe don't trade it. But if you did, let's talk about the auction. If you took this for a continuation trade, here's what you need to be conscious of. We tested yesterday's low. The change in the rotation, short covering. What about everybody else in here who's short? Have you thought about it? You need to be thinking about it. If we don't get below this because this was too low, then what's the possibility? Squeeze. So this was not a short for me if I was trading today, and I'm not trading today. I'm hugging my computer. Actually, I'm using a fan to try to keep it cool. It's 85 degrees or so down here, 86 at the moment. You got to love the jungle. Now this is a structured trade. And this was interesting because I was looking at this and it's structured. You were asking me, Gavin, about a structured trade. This is a structured trade. And for me, it's called VWAP. The VPOC, you'll notice the liquidity comes in. We have icebergs. That's pretty big iceberg selling in here, given that it's rollover. You could see it here. There's a trigger. So here's the trigger. The test is here. Trigger. Another test is here, and it's a mean reversion trade. This is where you're going with it. So this trade will go here to here, and guess where else it might go? Out here, below volume. So what this sets up is something like that. And this is mean reversion, underline mean. Now, whether or not you take this as part of your plan, for me, I would find this a questionable trade to take because of what I just explained. But I know if I do take this trade, because if this is too high, I'm going to cut. Reversion trading is basically, I'm not paying that. Back to retail, fair price, think shopping. And then what's too low? Well, I know in the profile what's too low. It's this outside edge, and it's an area. It's nothing more than that. So this is out here to here, and then somewhere, or down, or zero. It can do anything. Let's walk. See what it did? So this is not a trade that I would take, but let's say I did. This is my scale. So I'm just saying this is reversion. But remember what it already told us. When I'm talking about the participants. Too low here. Too low. What about this? What about this? Too low. Outside edges here. Didn't get there. Okay. All of this is saying too low. Now what? Market is short. What can we do? Come across the range. Another conversation I was having this morning in Trader Lab was about the mid and the VWAP. And this is where something that's hard to understand for all of us, especially me, early on was something called context, because I was very much a mechanical trader, okay? So in other words, sell the mid. Well, would we sell the mid here because there's a line on a chart, or would we be prioritizing what's happening and what did happen over the line in the chart? For me, it is not a short. It is ignore it, because retail traders are going to sell the mid or have their stops here. I have no short here. Let's see what it does. There's another trade here, but it's not the mid. I'll show you what it is. It is mean reversion. You'll see it. So where's our outside edge? It's going to be out here. So if and I have to be very careful because the market is short. So I have to be on guard for the squeeze. This is the thing that'll is joyous for you. So what is this? We don't sell the mid. What might we sell? What is this? Your outside edge. What's at an outside edge? Let's come back before we get there. So we don't know. All right, there's your mid sellers. Thanks. This is great because now there's going to be buy stops here. But what do I already know? Let me get back here before we even get to the mid. This was too high. This was too low. That was retail, and we left it. If I come back outside, and we don't know where, remember, but I know where my stops are, right? VWAP and mid and over this swing. This was the last where we had our sellers. So buy stops are above the swing. I'm not going to sell this. I'm not going to sell that. And I know traders mechanical retail traders keep their stops here. Not so much for me. So now it's, where's the outside? And this is where the teeth chatter because nobody knows. So the way the profile works is if I look up, I can go, well, I know this is no good at the time. In other words, they rejected that retail price. Think of these like stores. Shopping. Trading is shopping. I hope you know that. It's nothing more than shopping. The problem for us is we're shopping all over the place. In your supermarket, when you go shopping, prices don't change much. Here, they change in real time. That's the only difference, okay? So, too high. I'm not paying that. Yeah, but it's on sale, Tom. Yep. You know what? I think we can get a better price. Let's drive away, leave the store. Now, we're coming back the other way. Too low. Now what? Too low. What about this one? Too low. Retail price here. It was too high. But what's above swings? Stops. Retail trader behavior. Oh, sell the mid. No, you don't. Well, you can. Me, not so much. Now, here's the other thing about this. It's all random. Today, you could sell the mid and it goes to zero. And you're going to go, wow, that was great. But maybe you don't have an edge selling the mid. Maybe every time you sell the mid, in spite of random trades, it's a loser. Would you still keep selling the mid if you lost? Even though randomly you win? You see, that's what keeps us from actually knowing the difference between an edge and just randomness. And that's the work part of this. Not the fun. Work. But we're in this, this is a business, right? And we all pay the other side. Casinos pay the gamblers. So we can't don't get into this thing about, oh, I got to be right. Nothing to do with right. Executing your plan is the only thing that can be right. And you need to have one. Otherwise, you're just random. In a random environment, that you're on your way out. So, what do I know? Let's talk about what we know. I know this was too high and my outside edge is here. I don't know, are we going to stop here? Are we going to stop here, right? I do know the stops are here. That part I know. So that's as much as I got. And now, here's the possibility. Keep going, of course, or find my sellers out here somewhere and come here. Again, mean reversion. What was this? Mean reversion. Underline the mean. Even this is mean reversion. Coming back here. But what do you know when you come up here? There's stops here and there's stops at the mid. Would you sell this? I would not. Would I step in front of, look left is what I would say, those buy stops and the stops at the mid? You do know there's stops at the mid, don't you? Come on, be honest. Do you know there are stops at the mid? When you trade, have you ever, and do you think other traders put their stops at the mid? What do you think? Yes? No? Who knows? Retail trader behavior. Write this down. Think like a retail trader. Don't act like one. Anticipate their behavior. Don't participate in their behavior. Anticipate to participate. I anticipate retail trader behavior. How can I do that? Because I used to do that when I was learning. Oh, it's coming to the mid, sell the mid. Yeah, and I'd have winning trades and the rest of it. But if you start keeping statistics under certain conditions, that trade is qualified. Is it qualified here? Not for me. Maybe for you. Why? I don't have an edge here. Where's my edge? Out here. Why? Because this is too high. That's my resistance. And where's my outside edge? Where the sellers ripped away from here. It's left here because of the urgency. It's called a low volume node. And high volume is retail. Just think shopping. The price is too high. You won't pay it. You leave the store. Ever done that? Try that when you're buying a car. You will leave the showroom. If it's on sale or undervalued as you perceive it or below retail, you'll buy it. And then in the supermarket, they bring it back to retail. So it creates our rotation even in your supermarket, but it's a slow time frame. Here, all over the place. It's the only difference. Out here, no clue. Location. So let's watch. Now, this is the retail price. So once I take these guys out, then for me, now I can be looking for the short. And it's going to be out at the outside edge. This is called mean reversion. The joke is mean because you don't know where it is. It might have been here and a short, but what do I know? I know this is an outside edge, and I know I can come. This is my resistance. That's what I know. I don't know anything. So if I get into this thing, let's say I get into this thing here, right here, I have a choice. My stop can be here, and I'll take a stop, or my stop has to be further away. Let's assume I take this, I take a stop, I get another trade, and I'm further outside. I'm going to show you the microstructure. And by the way, you don't like taking stops? Who can like that? This is like paying bills. You guys ever sit down with your checkbook and pay some bills? What do you think about that? You happy to do it? What about you run a business and you have overhead? How do you stay in business? You got to pay your bills. How do the casinos stay in business? They pay their bills. Overhead and costs of production. It's a readjustment of how you experience this. We experience this very much as an approval, right, wrong, validation, self-worth. I mean, the market's not here to do that. You're not going to get it here. Sellers are here. There's the buyers going to the moon, break below. As soon as I break below this aggression, that means that there was a passive. The green delta is aggressors, and those are buy stops and market orders, and stops become market orders. So you don't know. Break away. This looks the same as this, doesn't it? See, they look the same. That's why we take stops. We're probing for a location. But I can take this trade because I'm trading the auction and my retail price is out here. So I have this range. By the way, trigger, right? This volume here, buyers are here, sellers are here, buyers take control, they are absorbed. When I break below here, below those buyers, this is a trigger. Don't forget, the same thing happened over here. Just saying, this is part of the joy. You could be selling this, stop there, and then you're going for VPOC, that yellow line, wherever it went. Down here, going for this. That's called mean reversion. Let's watch it now. Too high. Notice some familiar behavior. So you have you took a stop, Yeah, we have to get over it. Scale is here. Next target would be down here. Or trade management. It's wherever it is. Okay. So where did we go? Let's look at this. Since I haven't seen any of this, but that's just a structured trade. So let's look. Where's that outside edge? It's out here. Remember what we're trying to do. Outside edge to outside edge. And we do know at the time this is too low. Now it can do anything. So we have to be very conscious of this, okay? We do have a high probability of taking this out. So if you took the short, it's trade management. It's not what you do with this. It's your plan. Is it going to go down here? Here's what we have below us. And again, no clue, not my job. I have this gap. It's been very two-sided, kind of abusive, I would think. We have this down here also, which is another target. And these are on the higher time frame charts. It's around 41. Somebody want to confirm that? So it's basically alignment and trade management. We may get here or never. We may fill this gap or never. It's not important. What is important is not making it up and having to ask yourself, what should I do? When you come to trade, at least the way a professional trader operates, and I'm just going to say, if you talk to anyone in Trader Lab who's been doing this a while and is consistent and the rest of it and has a plan, if you can't predict the market or the random rotations, the only thing you have is your plan. So the plan determines how you operate in that randomness. not how you emotionally respond between fear and euphoria. Fear, euphoria. Oh, it's great. No, it's good. Right? Do you go through that emotionally? If you don't have a plan, then the only thing that is working in your mind is the chemicals that are released, fight and flight and the fear, which we all have. So the uncertainty, because of our primal wiring, releases the chemicals, which is, basically fight and flight and fear, fear of loss. And the brain here, primal wiring, can't differentiate between this and a saber-toothed tiger. I mean, the responses chemically are the same. Cortisol and the rest of us. So FOMO and the rest of it, bailing out, moving your stop, all this. The answers are in the trade plan. So the comfort, if you will come from statistical probabilities in spite of your emotions that are going to be triggered, okay? Still feel the emotions. You have to learn to ignore them. When you have a tangible statistic, and this is the work part, you can control the emotions. If you don't have something tangible, then all you have is emotions. And that's where your errors come from. And here's the real question. How would you know if you made an error if you don't know what you're supposed to do? You see, the only way you can make an error is violating your plan. So if you don't have a plan, then you're already making an error. How's that for logic? Does that make sense? Please give a like if you're visiting in YouTube. Hope you're getting something out of this. Again, apologies for the problems here. Trying to work on some of these things. I think I have a bad motherboard. So that's always a little problem in the jungle. So guys, answer this question. Do you know what you will do no matter what happens at any time in this market? Is there any ambiguity on what you will do? If you cannot say, I know what I will do, you are gambling and you do not have a good probability of sustainability. The beauty of this business is you have choices. You can't control the market. Guess where your control begins and ends? It begins with you, and your control ends when you push the button and put the trade on. That's where your control is. After that, you're following a plan. Answer the question. It's the most important question that you'll ever answer. And if you think you have a plan, then you know every piece. What qualifies a trade? What are the conditions? Where does the trade show up? What is the trigger? What is the trade management? If you're using statistical probabilities like we do in TraderLab, what's the potential target? What's the range to target? What's the trade management process? When are the conditions not qualified for trading or taking that trade? And if the condition changes, are you going to be mechanical or are you going to adjust to the condition that exists? Are you also able to understand that taking stops is overhead and cost of production, and you grade yourself by having an edge and only executing when you have the edge? If you can't define that, you're gambling. Not more complicated than that. So this is the question, and it's the only question you need to answer, and you must answer that completely and honestly. That's the choice you have under your control. And you can ask anybody in TraderLab what the most difficult part of this is. And the most difficult part is learning how the market works and learning about yourself. Yourself is the biggest obstacle to sustainability in this business. It is not learning how to trade. I believe anyone who comes to TraderLab can learn how to trade. It is not complicated, and you don't have to make it complicated. I know when I started, I thought somehow in the complexity, the secret sauce was hidden, I was going to find what everybody else didn't find. I was going to put the right mix of indicators together, and I was going to tune and tweak them. Now, don't forget, Wells Wilder published his book in 1978. I started in 1980. was all new. That's my excuse. And I didn't understand the business because I learned classical bar charting at the Merck, and that's before we had candles. Steve Nissen pretty much introduced candles, I think it was 87-ish. If somebody, I don't remember exactly. It might have been 84. I can't remember anymore. But before that, we had bar charts, open, high, low, close. Was this candle thing, you know? But so I kind of grew up in the business as the technical analysis was developed beyond, Wyckoff and some of those guys, and classical bar charting, your head and shoulders, and the rest of it. So unfortunately, I mean, it's great to have that in my background. It's also like, can I catch those years back? No. But I learned a lot. And unfortunately, and it took me a long time, I thought it was a matter of fixing it and making it better. And that was the random winners. The takeaway for me was we all have winners. And doesn't matter what you do. You could have a random buy-sell generator, you're going to have winners. So what does that tell you? We had a magic 8-ball on the trade desk. When I sat on the desk and I was managing traders and trading funds, and again, trend following, none of this day trading. We didn't have it back then. Yeah, you couldn't day trade. I mean, getting a quick fill was picking up the phone and talking to your guy on the edge of the pit, and which is the way I used to trade the big S&Ps. And even then it was swing trading. But I'm just saying, that was like back in the day, right? So you write your order on a ticket and timestamp it. How many of you ever done that? So I'm just saying is, most of you have probably done the same thing as I've done, but because you're sold a software toolbox that has a bazillion things in it, you could spend your life mixing, matching, tuning, tweaking, and getting the random winners. I always had winners. That was never a problem. I just would have, and I could have strings of winners, but over time, my equity would leak. And, we're talking profitable months and everything. So I built systems to try to optimize. And that's where I learned a lot about lagging processes. And context is a lagging process. So in other words, if the market's going down and it's directional, we have approach for that in TraderLab. But what happens when it gets into this and we're now rotational? You trade this the same way? Not in TraderLab, you won't. Now, you won't know it has changed until some hindsight. But remember where it changed for us. It was here. Remember? When we came above this, it said possibly we found too low. Now, it doesn't mean it won't take this out. We have over 90% probability to take out the first hour's high-low. We can get into the gap. We can go anywhere. I suspect that might be on the hit parade. But what do you do in the meantime? Have you ever thought about a Barca lounger and just wait for your trade? Do you know where your next trade is? By the way, what was this? Isn't this a short right there? This is a variable high volume node. That's a structured trade in the TraderLab. You could take that. Where's our support? Outside edge, remember? These are doable. This is a good one. There to there, and subject to your plan, you're either going to fall out the bottom, or, this is the joy, or find too low, because don't forget, your buyers were here. You see, you have to look left. What happened over here? Buyers. What happened here? Buyers. What's under here? Stops. If I get short here, where am I going? Stops. What might I get? Well, zero or rotation. What do I have going on here? Rotation. How do I trade that? Here's the answer. Your plan tells you how to trade it, not what's going to happen. Remember, it isn't about, it's going to go to zero and I want to get all of it. What I want to get and what my plan offers me is edge. Not knowing and not getting. Only process that has edge, and it's just taking it as it comes. What the market offers, your plan will extract if it has an edge, and you have the discipline to execute it. if this is making some sense, I encourage you to come to Trader Lab, visit the lab. By the way, if you're in YouTube, give a thumb up. And hopefully I can get some things straightened out here in Costa Rica. I think my laptop gets annoyed with the heat. It's 86 degrees here right now, but it's not heat. But I could fry an egg on it. Yeah, it's real hot. It's a little disturbing when you have these trades and you can't, in good conscience, put a trade on. Do you guys have questions? Please post them. How you doing in YouTube? Everybody conscious? Appreciate you stopping by Trader Lab today. The most important element, if you're visiting, whether you're in Discord or YouTube, is to know what you're going to do before it happens. Why do you need to know what you will do? You can't predict what will happen, but you know what you can do? You can know where it might happen. That's what this is right here. Right there is a Trader Lab location for a short. There's your trade. You see? Not the mid, right? Not the mid. So if you took it there, you get popped, you get popped. Welcome to trading, if that's your plan. Or you're further away, which would be have to be out here. And what's the right place to put your stop? Have you ever thought about it? What is that answer? I can give you the answer. It's where, over a large sample size, you derive an edge. You may do much better getting stopped out here versus having a stop out here where it would fail. Versus in other words, get stopped, put it back on, versus having it out here. You know the answer. You got to know the answer. If you don't know the answer, you are behind the 8 ball. Outside edge. Now, this is where your plan has to come in. Now, for me, I don't have anything to do here. I don't have any location, and I'm not outside far enough. By the time I would get in, you know, this is like using a shoehorn. And I'm only talking about me. I don't give trade recommendations. There's other traders in Trader Lab or, you know, who, if they have an edge, will trade this. Me, not so much. And we have other trades here too. I'm going to mention them to you, and they're not recommendations. We have something called the IB continuation trade. If we break here, subject to how much we break and we rotate, this can become resistance here and up to there. So depending on the behavior in this area, we can come here and here. These are potential targets, or we never have to get there. You know, it's just not important. What's important is knowing where your trades will show up, having a plan, and only trading when you have an edge. Other traders, now I sit here and I look at this, and there's that part of my brain that says, gee, you coulda. Yeah, I coulda, right. In hindsight, I could have sold the high and bought the low, right? Well, that doesn't work. So what does work is knowing where your trades are. You don't need to take a lot of trades. You're not sitting here like an hourly worker. You do need to take the trades that are going to potentially pay you. And the only way you know that is having done the work beforehand. If you talk to traders who are profitable, and it doesn't mean there's one way to trade or one time frame. That's not the point. Most of the traders I know are not scalpers. Day trading is not action and dopamine, unless you want it to be, and then that's what you're going to get, dopamine and action. It is risk reward. So let's say I put that trade on wherever it was, the last one up here someplace, over in here, and I took a stop. And then I put it on again, and I get this. Doesn't that pay for my stop and give me a profit, assuming I use a trade management process? And even if I don't get all of it, but I'm still profitable. But if I'm going chop, chop, chop in here, how many stops am I going to take? Well, Does that make me profitable? What makes me profitable? Range. And again, you have to determine that. And it's not a right or wrong. Again, the statistics are what prove the concept to you. Now, for short, subject again to your plan, this is where we were going, right? Other traders could be done here. It doesn't matter. This is where your plan it tells you what you do. So when we were talking about this trade, I was saying, well, IB, and maybe down, right? But I'm not saying what it will do because I have no idea. It could just as well come right across and squeeze. This is what we need to accept. So when you understand what might happen, it should be based on probabilities and the condition of the market. The other part of it is, where's the fuel? Where's the stops? Aren't they going to be under here? And if you have a gap and a liquidating market, then we can go lower, right? Does that make sense? The trigger for the MR short, I'm assuming you're talking about this one. Is that right? If you're in YouTube, I think you're asking this. Okay, here, let me show you the trigger. There's actually two here. One would be a potential stop. There's two. The location is, let's see if I can do this. Not sure I can do this. So this is the location here. So if you sold this, well, actually, here, let's look at this. So this is the location. Sellers get below the buyers. Buyers are here. Buyers are here. This is very marginal. If I took this, well, I have to follow my plan, but I might stop out here. But this is really where here or here. So let's look at the trigger. If you took this, you might take a stop. This is your outside edge. So it's an area. There's no precision with this. So assume you took a stop. Let's look at the next one. Right here is absorption. So let's look. This. Then here, break. You would have to sell this as soon as it broke right here. And your stop will go above here. And then you're scaling there. I hope that's the one you're asking me about. Because that's the mean. So this is the reversion. Then you've got this outside edge. This trade could be done right here. All it is this to this. Trade could be done. Or, and now this is assuming a two lot, you could be done here. If you're running more contracts, then you're going for this or, down out the bottom. Or, and I'm giving you the ors because this is plan specific. If you're running a two lot and you get risk neutral, you could leave your stop back here, but you got to be okay giving the rest of it back. You'd be profitable if you got taken out, but this could just as well just rotate. So it's not about knowing. So, oh, there we go. So, or you're just hanging out, there's no right or wrong. I hope that's useful. Please give a like if you're visiting in YouTube. I got about 5 minutes left. Again, apologies for the challenges here in Costa Rica. I'm going to be getting this screwdriver out again and trying to work on this laptop. There's not much you can do with them, but I'm going to try. If you have any final questions, please post them. Remember, if you're visiting in YouTube, there's a link down there. If you want to visit Trader Lab community, there's no cost for it. It is a serious community. It's about the business of trading. There's a lot of resources there, some really good traders, and a lot of developing traders just like you. Am I still streaming? That I can't tell. Am I live or is this Memorex? Can't really tell. Still going? Okay. How we doing in YouTube? Am I still going in YouTube? This is Investor RT, and this is the March contract. This is these are RTH candles. There is the gap down here. This is yesterday's low, Friday's low. We're now below it, and the possibility is, and it looks like we're out of value. And this is the possible target to come down here, 68.41. Having some trouble. Well, we're at the end of the party, it seems. I have no idea what's going on now with the internet. You know, I like to keep things interesting. You know, the monkeys swing on a vine here. Internet comes and goes. Power comes and goes. You know. I will say one thing, though. It's very humid here in the jungle. So let me see what I've got here. Oh, 86. I think the term is balmy weather. Please give a like if you're visiting in YouTube. Don't forget, Bookmap is having its Black Friday end of year sale. If you ever wanted to try Bookmap, time to do it. 50% off Global Plus, 50% off data. This is good 3 months. 60% off Global Plus if you want to give it a shot for a month. All these are good till December 31st, and 50% off add-ons. You go to bookmap.com, check it out. I always think about this and I'm going, gee, in 2015, why didn't they have this? But not so much. Please leave a like if you're visiting in YouTube. Apologies again for the challenges. Go to the Trader Lab. There's a lot of additional education in the Bookmap server. Stocks, options, crypto, order flow with a high tier tool like Bookmap, market maker behavior, algorithmic behavior, a lot more. You can definitely, in my opinion, move your game forward if you come to Trader Lab and Bookmap and do the work. The only thing is nobody can hand it to you because whatever you do has to align with you psychological. And psychologically, that relates to time frame and the reality of this business. We're not trying to catch everything. We're trying to get our piece. Hope that makes sense. Don't forget the like on the way out. I've got all kinds of alarms and things going off here. Not only am I out of time, but the internet's throwing a fit here. They're saying, Tom, time to go. Take care, everybody. Thanks for visiting the Trader Lab today. Thank you, Trader Lab and Discord, for your patience with all this. Sorry, I can't be as active as I typically am, but I know you guys help each other out. That's what makes the community unique. Have a great day, and I'm getting back to working on this computer. Hopefully things will be more stable. Thanks again, guys. Thank you for visiting in YouTube. Don't forget to leave a like on the way out. Support the stream. Keeps me coming back. Take care.